Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update on commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need any help with anything, check out finding-value.com. That's where I go over the individual stocks, individual companies, what I'm doing. You can see what I'm doing, what I'm buying, and the companies that I hold in my portfolio. There's a lot of really good buying opportunities at this time as we go through it. So let's dive in. Let's see what's going on in the markets today, and I'll give you my financial opinions. So here we go. We're starting with the DXY. We did get a little bit relief today in yields and the dollar. And I'm sure if you guys have been watching this, you're noticing that the dollar and yields are basically interconnected. The DXY is just a relative strength indicator of the dollar's value in relationship to other currencies. And really, what we're monitoring is we're monitoring the relative strength or weakness in the monetary tightening or loosening of relative monetary movements. That's really what's driving all of this. So the dollar going up or the dollar going down is just a relative strength measurement against the monetary looseness or tightness of the other currencies it is measuring against. And that sets up certain conditions in the market where certain assets outperform or underperform. Generally, when the dollar goes up, yields go up, and you see an outperformance of oil. That was a strong outperformer during that time frame. But that doesn't mean that oil can't outperform when the dollar drops, because generally it does. So think of it as a strong inflationary impulse move higher is where rates and dollar go up. We had a relaxation in that, and this chart here is more or less an oil chart. It really is, because yields follow oil, and I do think that oil is going to move up based off of the DXY moving on up here. But we're down today. We have yields that were down with the 2-year, the 10-year, and the 30-year. Yields are down, and we'll have to see if we get a topping pattern here. This is a bearish engulfing where we could pull back in the 2-year yield. We've got the 10-year yield that pulled back, but it's not a bearish engulfing pattern. It's not like the 2-year. And then the 30-year also was down, and it's not necessarily a bearish engulfing. So we'll have to see if we actually get another pullback, if we go back and forth sideways for a little while, potentially. And we just stay in this valuation channel. This channel here is what I'm talking about. And what that means is that we'll just see some assets advance during a pullback in yields, and so other assets will advance when yields go up. And I don't, it could stair step higher. For instance, when this goes down, gold goes up, but it goes up, 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 and then it stair steps sideways as yields move up. And then it advances again as the yields pull on back. That's probably going to be my best guess in a undersupplied world of commodities. TYX TNX ratio up a little bit. That's going to be a little bit of a tailwind behind gold. So we should see gold up a little bit today with the TYX TNX ratio up, yields down, and the dollar down. Bond price is also bouncing off support, up about 1% today, which obviously bond prices up, yields are lower. And then the 2 and 10-year was basically flat today, down 0.01%. So looking at the actual assets and how assets are moving off of that, I'll call it the structure of the market underlying the pricing of all assets and yields. We've got gold price up about $9 today an ounce. We have a weird looking chart here where we kind of squeezed up, we broke on down. Are we going to continue higher here? And I think that highly depends on what yields do. And we'll see if that correlation sticks. Silver was up 0.33. We're at support. It's getting support right where we're at. And we're still squeezing up on the longer term view for a nice little setup here, which we could really rocket if we get the dollar to drop or yields were to drop. We would get a big move to the upside because it's coiled up here. Platinum also coiling up. We're up about 1% today. And again, guys, I think this is setting up for an explosive situation to the upside when that dollar drops. Palladium also just moving sideways, and we're basing out in palladium. This is bottoming. This is a bottoming function that we're going through. XAU to gold ratio, we're up a little bit, where the gold and silver mining companies outperformed gold itself. But again, guys, this is a really cheap price in terms of the ratio. We are still underneath the downtrend line that we still have to break. We have not broken it yet, and we're waiting for the right market conditions for this to take off. Could we get the right market conditions here very soon? We're squeezing up. We're kind of between a support level and a resistance line. And we could break here and move on up and really start to outperform. The gold and silver mining companies really start to outperform gold. It's a possibility. Now, we haven't broken the big downtrend line yet, this big boy. We break that big boy, I'm going to be very bullish. We're still underneath it, and maybe oil still has some room to run, and maybe we go sideways for a while longer. It's possible. CRB index is up. That looks good to hit it to the upside. It looks very strong, and hopefully that's what we see. We've got the CRB to S&P 500. It is up today, not very much, and it's still trying to base out down here. We've got a lot of, I'll call it, a lot of people are running and chasing performance in the S&P 500 and the NASDAQ. I have a feeling that we are at very high valuations, and I would not be in that sector over there because of the valuations. Its risk reward is skewed to the risk side versus the reward side. The commodities are in an asymmetric bet from a very cheap level, and we've got lots of upside potential. We're in a wave that we have a down wave that's going to get everyone kind of messed up, and we have a lot of upside potential still with commodity outperformance of the S&P 500. It hasn't happened immediately, but I think it will happen eventually. It's a question of not if, but when. GDX, so we're up a little bit today in GDX. It's trying to find a bottom. We'll see what it looks like. It's not a huge green candlestick. It's not a reversal candlestick. Just wait and see. GDX is the same way, and same with SILJ. You know, we're looking for potential squeezes, and it could be squeezing. Here, look. We could be squeezing up. It looks a little bit premature, but we could be squeezing up, and we'll have to see if this thing breaks out of here, which I tend to think it might, but we'll watch it and see. Crude oil up about 1% today. I think this thing's going to bottom here at some point, and I think we're going to start to really work our way up. We broke out of this downtrend line. We did a retest, and I think we could go up quite a bit. Obviously, it depends what the world, how the world's, in terms of geopolitical tension and war, all that's going to matter. But I think we've got a good base here to try to work our way on up. TTF gas moving sideways, it's basing out. I think that we are bottoming in natural gas worldwide here at some point, and I think that we'll probably base out and bottom right where we're at. Natural gas down to $2 of MMBTU, and this is ultra cheap, guys. I honestly, I think we're going to bottom here over the next 3-4 months, whatever the price will be. We'll probably maybe even see a cutback potentially in maybe rigs drilling for natural gas. But in my opinion, the cycle is probably going to be bottoming here next 3, 4, 5 months, somewhere in there. XOP, yeah, you know me, up 0.76%. And again, we're still putting in this right shoulder. And I think when we go up here and we break, we are going to be laughing at how big of a move the oil and gas exploration production companies are going to do. And I don't know what the driver is at this time. I know we've got supply constraints. The supply side, we're eating through inventories. We've got low strategic petroleum reserves. We've got all that stuff that's on the reserve side. I think something is going to come, and I don't know what it will look like. I don't know when, That on the credit side is going to drive us to the upside. The credit side. Think of it as QE, think of it as reduced rates, think of it as more bank loans in the future, potential stimulus money. I don't know exactly what it will be, but I think something like that is coming. And why do I think that's going to come? Because when you look at the gold price and the silver price, they're going to lead the move of oil to the upside. And something will happen. I don't know what it is. Banking crisis, liquidity problem, I don't know. But something could occur which will drive this thing way higher because of the supply constraints in the system. OIH is also moving up quite well today, up 1.7% and bouncing off support. Is this a double bottom? It could be, and we'll have to wait and see. Sprout Physical Uranium Trust down a little bit today, but still looks good to go higher. I don't see any reversal candlesticks. I don't see anything that would get me worried about a potential topping pattern, at least not at this time. I don't see, a ton of selling pressure that is just, big red candlesticks that are closing strongly to the downside, at least not yet. So everything still looks good. URA also looks like we're just filling a gap. And I still think this has good momentum to the upside. Still looks good. We've got URNM also looking good. Not a huge selling pressure day or anything. The gap is closed for the most part from yesterday. I think we could still easily go higher. And URNJ is in the same situation. Still easily momentum to the upside, not much selling pressure, no reversal candlesticks. We kind of had a flag pattern there, another flag pattern. It still looks good to go higher. So everything looks a-okay with the uranium sector. With the lower yields and lower dollar, we're going to start to see a lot of these other markets like renewables, the overall stock market. They're probably going to go higher with the rates coming down like that. So TAN is up 2.87 with the rates going down, but it needs a sustainable rate decline or sideways rate movement for this to go up. COPX it's really rate sensitive. So when rates go down, copper goes up. When rates go up, copper goes down. It's pretty simple like that. And copper is still at a very good location to be looking. This is basically a consolidation, which will eventually resolve upward, in my opinion. We've got lithium that's also very rate sensitive. Momentum's to the downside, but we've got a nice little bounce here today. Some people probably think that lithium's bottoming. I think it's early to make that call. We've got lots of downward momentum, and we're probably going to have to work that momentum off basing sideways, much like natural gas is doing right now and coal is doing. This hasn't really based yet. REMX doing the same thing, momentum to the downside, but we had a pretty good day today. Lower yields, lower dollar, but I don't see a base yet. We're going to have to base out if we want to turn this around. S&P 500 is up, and it's still got momentum to the upside. It looks okay, but again, guys, I don't want to be entering at all-time highs here. I think it's risk reward is not in favor of the S&P. Neither are the market conditions, and the Nasdaq still looks good to go higher as well. But again, I think the valuations are overdone, and I think that this is eventually going to be a big Batman pattern. Is what I think it will eventually turn into. I don't know the exact high, and the high doesn't mean it has to be right here. It could go above that. And it could even run drastically above that. We could even see it run up here and do something like that and put like a little false breakout on top of it, which is really going to screw a lot of people. KRE, this is our regional banking ETF. And again, I still think this looks good. If rates continue lower, I think that banks are going to make more loans in the housing market. And I think it'll push it on up. Emerging markets loves that weaker dollar, weaker yields. Up 2.27%. I think emerging markets looks fantastic here. Fantastic. And there's other spots within emerging markets, other emerging market funds and stuff like that, that I would be looking to enter at this point. I think it looks great. XHB also liking a little bit weaker yields, so that's being quite resilient. We're just moving sideways, collecting ourselves before what I think will be another surge to the upside if rates do come down. Mu also moving up. Lower rates, lower dollar, higher mu. Moo! And this could be real close to the bottom of where we do our final retest before a surge higher. Copper moving on up 0.3%. It still has some work to do. We've got a lot of momentum to the downside that it's got to turn that guy around if it's going to turn around. Otherwise, we could see the lower side of that pattern here. Iron ore up barely, but momentum to the downside in the short term. I think longer term, we are going higher in iron ore. We've broken out of this big pattern here. It's a falling wedge. You generally break, and then you work your way on up. It stair steps higher, and we're in a stair stepping pattern here, is what I think. It's going to develop some pattern. Aluminum up, weaker. Remember, weaker dollar, weaker yields. Aluminum likes to be going higher on those types of days, and we're at support. Baltic Dry Index up 2%. Again, I think Baltic Dry Index is going to go higher after this falling wedge, and we're going to just continue to work our way on up. We've got Newcastle Coal, which is down 1.4%, and we are still basing out. It's going to take some time here, guys. But I think that we are basing out much like natural gas, and I think coal and natural gas will move up together. They're married at the hip. They are both electrical power generation, and yeah, they're competing with each other. We've got Bitcoin up 2%. It looks like we've got a nice kind of bullish engulfing today. That looks like it could continue higher. Looking good. And Ethereum also looking pretty strong today, up 3.65%. And let's see if that can continue to the upside. It doesn't look too bad. Had a little struggle, power struggle here with the buyers and sellers going back and forth here in some weird looking pattern there. But we've broken to the upside today, which is good if you're bullish on Ethereum and Bitcoin. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. You can look at the description link for the discount code. I think we've got LEAP for leap year because we've got 29 days in February. It's a leap year. So check out the discount code LEAP if you like. There's a big discount for a yearly membership if you want to sign up for the yearly membership. Or if you want to go to monthly to yearly, you can use that LEAP code if you like. But that's what I've got for today, guys. And hopefully you guys are hanging in there. And we'll catch you next time. This is Finding Value.